The Guarantee Company of North America recently hosted a roundtable to examine the Canadian transportation insurance market with some of the industry's leaders. The first of this three-part series explores how changes to NAFTA might impact business.
10 million trucks cross the border annually, so NAFTA becomes a very big part of transportation.
No one really knows what's going to happen with NAFTA now.
It's up in the air right now, and a lot of the carriers don't understand what the regulations are, what the changes are, and unfortunately, they're sometimes the last one to know, and that results in some significant fines.
There was trade pre-NAFTA.
Exactly.
And in the hopefully unlikely event that there is no NAFTA, there still will be trade. And so I don't think, and maybe just to take it a step further, there's been a lot of rhetoric about 850,000 jobs, American jobs lost to NAFTA. When you divide 23 years into 850, you come up with about 40,000 jobs a year lost. The job gains reports are higher than that per month in most months, and probably a large portion of the 850 jobs were lost to technology, necessarily not to NAFTA.
Well, in our case, we've taken great measures. We've been preparing for a lot of changes with regards to the U.S. Because of the fact that the driving force, one of the biggest driving forces, is the e-logs, obviously. And want it or not, it's a part of the industry that is non-negotiable. You do it or else. So we realize there's an extension till March, I believe, for the DOT, but we have already implemented it, and our fleet is totally e-log. It's evident it's a lot of cost put on the bottom line. When you look at a fleet our size, we're looking at a 30% drop in miles.
Yeah.
That impacts your revenue, regardless of how you calculate it. So you have to be a little bit more innovative in regards to the type of business you're going to run. In our case, we're focusing more on the short haul out of the U.S. into Canada, so that it minimizes the amount of losses in miles that our drivers can suffer. Obviously, we're all holding our breath because it could really go either way. If the U.S. decides to hardball and continue beating on Canada, yeah, we could have a situation, but like the gentleman said, we will continue to have the trade, except, there will be a cost to it.
I mean, NAFTA's 30 years old. It
Right.
needs to be renegotiated. It needs to be modernized, but at the end of the day, it needs to be fair. And, and they've got to get trucks across the border. What a lot of people don't realize is there's 9 million jobs in the U.S. that rely on free trade between Canada and the U.S. 10 million trucks a year. So that's a lot of jobs, and it's a lot of economy. So they start screwing down NAFTA. They're, I think they need to really revisit it.
It's getting a lot easier now for some companies if they've embraced the technologies that are coming through, and they are able to take whatever necessary steps they have to ensure that everyone in their organization is indeed ready for these changes, be it a complete direction in the way your company does business, whether you go from containers to flatbed freight, or you have an opportunity to take a different type of cargo because of the changes in NAFTA. Okay. But the companies that are able to react are the ones that are already ready.